Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. Today we're diving into United States Steel Corporation's proxy statement. It's a document that's usually dry as toast, but this one has a little spice, a battle for control of the company. Buckle up because this proxy fight might just end up being more dramatic than a steelworkers strike. This proxy statement is all about the upcoming annual meeting where shareholders get to vote on who sits on the board of directors. This year, it's not just a routine election. An activist investor group is trying to shake things up, nominating their own slate of candidates to replace the company's current board. US Steel is fighting back, urging shareholders to stick with their picks. Let's see what's at stake. Scroll background of the Kellerted solicitation screw. First off, there's this group called Ancora. They are trying to get 9 people onto US Steel's board. This isn't a friendly suggestion, it's a full-blown challenge. Apparently, they're not thrilled with the current direction of the company, especially the planned merger with Nippon Steel. The board is not happy and is urging everyone to vote for their nominees using the white proxy card and firmly telling shareholders to ignore Ancora's gold proxy card. Proxy fights can get messy, and this one is already heating up. Oard C. Skepton Stodderation of Span, Tealspan, Shoal, speaking of the Nippon Steel deal, it's a major sticking point. The current US Steel board stands behind it, saying it's the best way to secure the company's future. They even filed a lawsuit challenging the president's order blocking the merger. This shows the board is really committed to the Nippon Steel deal. If the merger doesn't go through, the board says they are ready to look at all options, whatever it takes, to maximize the value for stockholders. Let's peek at who's on US Steel's team. They've got a mix of folks with experience in finance, operations, technology, and even sustainability. Reading between the lines, US Steel wants you to think their nominees have all the right skills to navigate the challenges ahead, while of course they don't endorse the Ancora Group's nominees. The company makes a point of highlighting their good corporate governance practices. This includes things like annual director elections, mostly independent board members, and regular communication with stockholders. Basically, they're trying to reassure investors that they're running a tight ship. Here are the key items up for vote. Electing directors, an advisory vote on executive pay, ratifying the accounting firm, approving changes to the incentive plan, and approving an amendment about officer exculpation. It's important to note the board urges stockholders to vote for all the items so you know where they stand. The filing highlights how executive compensation is structured. Most of the pay for the top executives is tied to performance. So are they worth it? In 2024, most of the CEO and other top executives' pay was made of performance and stock-based incentives. The board mentions how it sets targets in line with peer median compensation. For 2024, a large capital milestone was completed with Big River 2. However, the financial results did not fully meet initial rigorous goals. Because of this, there was below target annual incentive, though the long-term incentive pay was above target due to performance awards. The report discloses the CEO pay ratio, which compares the CEO's compensation to the median employee's pay. In 2024, it was 148 to 1. That means the CEO makes 148 times what the typical employee makes. This can be a touchy subject, but companies are required to report it. To our knowledge, based on our review of reports filed with the SEC and other information furnished to us, there were no late filings or failures to file by any US Steel directors, executive officers, or other persons subject to Section 16 of the Securities Exchange Act of 1934 required to be disclosed in this proxy statement. The fees paid to the accounting firm PricewaterhouseCoopers for audits and other services are listed. The audit fees were about $4.3 million for the year. Make sure to verify those numbers yourself, but as long as the auditor is not doing a lot of extra work, it suggests the business is running well. Some span. This document urges stockholders to vote for all the board's director nominees on the white proxy card, and warns stockholders to disregard the materials and gold proxy card from Ancora. Basically, it is trying to tell you to stick with what you know and what has worked in the past, and that the current path for American Steel is the best path forward. So what's my take on all this? US Steel is in a tough spot. The steel industry is cyclical and competitive. Their ability to adapt, innovate, and manage costs is more important than ever. I'm not a fan of the ongoing litigation which costs shareholders money, time, and attention. This is the real world though, and I have to respect that they are trying to do what's best for all shareholders. The company's success hinges on how well they execute their strategy and how effectively they manage the concerns of activist investors. If US Steel can't convince shareholders that their plan is the right one, they could face a significant shake-up at the top. The coming year will be extremely important for the company as it navigates challenging times. If the transaction doesn't go through, this will be a real battle for shareholders that might take the company in a brand new direction. Thanks for watching Corporate Decoder. If you found this breakdown helpful, hit the like button, drop a comment, and don't forget to subscribe for more insights into the world of corporate filings.